All right, so let's take a look at what's going on in the Toronto housing market, feet on the ground right now. So I'm going to look at it from a buyer perspective first. I was out with some buyers on the weekend. We went into a price point of around $1 million. The seller was holding back on offers. They had listed it earlier last week. When we walk in the house, before we even walk in the house, there are cars parked outside. Appointments prior to, appointments right after, people overlapping, very busy. We walk in the house, there's about 40 or 50 business cards on the island. So a very active day. Now, this home was artificially priced under market value in order to stimulate a buyer, a bidding war, okay? Now, so they ended up getting 31 offers on Sunday night, and they sold for a couple of $100,000 above asking. Now, it's very risky for a realtor to set up a house for bidding wars if that neighborhood, that particular neighborhood, didn't warrant the demand. Okay, so as we look at other houses that are coming on the market earlier last week and even yesterday and some this morning, we're starting to see people doing that same strategy where they are seeing demand in the neighborhood, so they are pricing it under market value and holding off on offers. If we were to attempt to look at that same market last month, December or even November, those strategies didn't yield the right results. People were holding off on offers, pricing artificially low, and they weren't getting the offers. They weren't getting the price that they wanted. So what we're seeing is a resurgence of buyers as we come into 2024 compared to 2023. The buyers look like they are starting to come back into the market. When we look on the listing side, so we had a couple of listings going back into last year. The amount of showings we were seeing last year were very slow. We were having few buyers come through the property. In fact, some of our listings in December only showed 1 or 2 showings all month. Now, it was the holidays and whatnot. However, 2 showings in the span of 30 days is pretty low. As we look at some of our listings this year that we put on the market 10 days ago, speak about a listing here. Again, just slightly over $1 million price point. We listed it. We had 21 showings. We were not artificially low. We were priced at market value, I believe. We had 21 showings and we got 2 offers last week, and we ended up selling it for a great price for our clients. So again, as a listing agent, we're starting to see a lot of buyers come back and look at houses. So why? What's going on? What's the change between last year and this year, or last month and this month? Well, twofold. I've been in this business for about 15 years. Typically, today we're going to look at feet on the ground, what I am seeing in the housing market. As a professional realtor, I work with buyers and with sellers, and today is January 16th. I'm going to talk about what we are seeing in the market. I've seen that same market every January for the last 15 years. In addition to that, buyers and agents and the market has been looking for some stability. The market has been coming downwards over the last quarters, over the last year anyway. We've seen the market shift downwards. So we have all of these buyers on hold waiting for the bottom. Last week, we saw the banks, all the major banks, cut interest rates by 70 basis points. Now that's a big cut. We're seeing insured mortgages in the mid 4s, 460s, 470s, 4.8, and that's a pretty good interest rate. Now, if we look at variable rate mortgage, those are still hovering around that 7% mark. However, if we look at the Bank of Canada forecast, there's a 15.15% chance that we will see a rate cut this month. And there's a much greater probability that there will be a rate cut going out into March or April of this year. So that stability and that direction is giving buyers the confidence to possibly move forward. So how can you take advantage of this market situation knowing what you know? Well, we know right now that interest rates are on the decline, and we're expecting more declines into 2024 and into 2025. We are starting to see a resurgence of the buyers come back in the market. Typically, as rates come down, prices will go up. Okay, so if we know that, and you are, let's say you're moving, you're going to sell your home, and you're going to buy your home. In an ideal world, you would buy today because we know prices are heading up. So you're going to buy it at the lower price point. You're going to wait a few months, and then you're going to sell up here. Okay? And thereby, there's a little bit of profit to be made in that move. Okay, so that's what you're going to do. Now, this is an ideal world, and we're not taking situations into account. If you're an investor, how could you work this market? Well, if you know that prices are heading up, yeah, interest rates are very high today, but we know that prices are very low. So you want to consider buying as soon as possible to take advantage of the lower price point. Yes, you're going to pay a higher interest rate, but that higher interest rate accounts to hundreds of dollars. And the lower price point, when markets start to move, could yield up to tens of thousands or even hundreds of thousands of dollars in upswing. So that's how you would take advantage of this as an investor. If you're at a point where the mortgage is kind of squeezing you right now and you can't afford to make the payments, and I've had many clients contact me with that same situation, and they're wondering if they should sell. And I pretty much said the same thing to a lot of them: don't sell, hold for a while, because we're going to start to see the market come back. I would urge you to hold for as long as possible if you're in a crunch situation, because a couple of extra $100 could yield tens of thousands of dollars by just waiting for the market to pick back up once rates come down. Who you work with matters.